Hello and welcome to our 2021 Top Tax Tips. I'm your host Craig. We'll just wait shortly for everyone to connect. Hope everyone's having a lovely Friday. So we'll start shortly. So our live stream we're designed to ask questions. So feel free to put questions in the comment box. Even as we're going along, we can address them as we're going along, or you can save your questions to the end. It's up to you. But yeah, so we'll get started shortly. We'll just wait probably another minute. All right. So welcome everyone. My name is Craig. I'm the principal accountant at Waddle Accountants, and today we're going to talk about the 2021 top tax tips for sole traders. We have a lot of sole traders, and there's a lot of opportunities and mistakes people make. So we want to just help our clients be prepared when it comes time to preparing, or if you've already prepared, amending your return. So let's get started. Just remember, if you've got any questions, feel free to put it in the comment box. I'll try and answer them as I'm going along because I can see the comments. This is an interactive live stream. It's not a sort of just a presentation. So if you've got questions, feel free to ask them, or you can ask them at the end. That's okay. So our first sort of opportunity or top tax tip is car expense. So one of the biggest claims for sole traders, whether you're Uber driver, handyman, it's one of the biggest claims. So you want to get it right to make sure that you're getting the most back on your tax. So how do you claim your car expenses? So there's two methods. So one is the logbook method, and the other is the cents per kilometre method. The logbook method is the actual cost of the car and the maintenance of the car, in simple terms. So the cents per kilometre method is more of a shortcut method to be able to claim your fuel rego, and it's based on a kilometre. So if you have, say, 5,000 kilometres, you can claim your car expenses based on the kilometres travelled rather than the actual cost like fuel. So the difference between the two, so the logbook method is there's a lot more work. The claim is typically higher. If you have no documentation, we always recommend the cents per kilometre method, as you don't require any documentation. So all you need to do is reasonably calculate your kilometres. So you can say, 20 kilometres a day between wherever, in related to my work, and you can just extrapolate with that. And with the logbook method, though, you need to summarize your actual costs, rego, insurance, fuels, stuff like that. And then you also need a 12-week record of your kilometres travelled. It's valid for 5 years, but once you have it, you typically have a higher claim, but it's just the work to put in to have that prepared. So typically the maximum, so with the no fuel, so sometimes if you want to claim the logbook method, but for some reason you didn't keep all the receipts for the fuel, so that's one that's very hard to track. So there is a shortcut to be able to calculate your fuel based on the kilometres travelled. So if you got the odometer reading opening and closing, you can work out how many kilometres are travelled, and then multiply that by your business percentage, and how many litres. We can calculate the cost per litre that way. So how to maximise your claim? So the claim under a cents per kilometre is on a maximum of 5,000 kilometres, which is, at the current end, I think it's 3,400 $3,400 tax deduction. The logbook method depends on your cost. So the more expensive your car, more fuel, etc., the higher your claim will be. It can be very, very high, maybe 10, 20,000. Could be a very big claim, but it's just making sure you have the logbook, the 12-week record of your odometer reading, so personal versus business trips, and a summary of your actual cost, rego, insurance, etc. So a lot of clients ask us about the instant asset write-off. So what is it? What does it cover? So it's effectively the depreciation of a business asset, which is pretty broad. So it covers things like tools, equipment, cars. So that is a depreciating asset. Equipment that you may use, trailer, stuff like that. So there is currently for the 2021 year, there's no threshold, and also for the 2022, there is no limit. So let's take, for example, that you spent, $1 million on some tools. You've got $1 million tax deduction. It's that simple. There is a limit though for cars. It's 59,000 and some change this financial year. So if you bought a $100,000 work ute, you would only be able to claim up, assuming 100% of it's work related, only up to 59,000. So sometimes, from a tax planning point of view, it's not a good idea to buy a new asset. So do you really need the tools? So our advice: make your business decision driven. Don't make it tax driven. So if you really need that tool or that new vehicle, you should buy it. The tax deduction will lower the cost. And sometimes you may want to plan to buy a new vehicle or new equipment, especially in the year that you've had a lot of income. So let's say, for example, you've just started or you have a bad year. You actually want to delay tax deductions because your tax rate in this year will be lower. So tax deductions are worth less. If you delay it to the next year because it's going to be a good year, buy it on the 1st of July rather than 30th of June. How to maximize your claim? So it's not too complicated. Make sure you have a tax invoice when you make the purchase, and that it is work related. It's very easy. GST registration, so it's something to consider. A lot of sole traders are either registered or not registered, and sometimes it is worth registering. So sometimes one of the factors is whether your customers are businesses that are also GST registered or they're private customers. So in that situation, if your customers are all residential private customers that are not GST registered, non-businesses, don't register for GST because your price will be 10% less. And with businesses, even though you don't need to be registered, I would register because both businesses are not out of pocket the GST, and you'll be able to claim GST and expenses back. The GST is worth more than a tax deduction. It's simple. So if you spend $10 of GST, you get $10 back. If you spend $10 and you're not GST registered, that becomes a tax deduction, which is only equal to your marginal tax rate. Sole traders, the highest marginal tax rate is 47% at the moment, and that's assuming you made $180,000 in that year. So if you spend $10, you'll only get $4.70 back. So $4.70 is much, much less than all of it. So GST being registered is worthy. So the second consideration is if your sales are GST free. So if maybe NDIS, so any sort of health services is GST free. Exports, so GST is an Australian tax. If you sell stuff overseas, you don't need to be GST registered, and the sales are GST free. But if you buy stuff in Australia, you'll be able to claim the GST back. Very important, for e-commerce clients as well, starting up. When should you register? So a lot of people wear that at 75,000 in sales. What we find often is that they're not aware of that it's a monthly turnover test. So say, for example, in the first month you achieved 70,000 in sales. Some people say, oh, you don't need to register, but that's not true, because in the first month of the sale you achieved 70. It's likely at the end of the year you'll achieve, well, whatever the calculation is, you're already going to exceed the threshold by the end of that year. So it's very simple. So just divide your monthly sales by the months that you've achieved, and then work out if you will exceed the threshold. If you get that wrong, you'll have to go back and calculate the GST. And you'd be liable for that GST if you got a GST audit. The second biggest sort of tax tip for sole traders is definitely home office expenses as probably the second highest claim. So you want to make sure that's right. So there's two different types of expenses. One is the running costs, and the other is the occupancy cost. So if you're an employee, so you're aware of the running costs, electricity, phone, internet. Occupancy costs is rent, interest on your mortgage, body corporate, water rates, council rates. If you're running a business from home, you can claim those as well. So that means, yes, you can claim your rent and your interest on your mortgage. So beware though, if you are claiming, if you're owner occupied and you own the house and you're claiming interest on your mortgage, part of your house will be, assuming it's your main resident, you'll have to pay capital gains tax on a portion of that house if you sell it. So another thing to be wary of is subcontractors or sole traders that are invoicing someone on a daily or hourly rate. You won't be able to claim occupancy costs, so rent, etc., and mortgage interest. It would be denied under what they call personal service income. And how to claim, so how to actually claim this, there's two methods. So one is the ATO shortcut method. A lot of people talking about this, 80 cents per hour. Unfortunately, that method only calculates the running cost. If you want to claim both the running costs and the occupancy cost, you need to use the actual cost method, which means demonstrating how much of your property relates to the business and how much is related to personal. So the most common method is square meterage. Say your property is 100 square meters and your home office room is 10. 10% of your rent, electricity, everything will be deductible. Where the room is used for multi-purpose, maybe it's like a lounge room, you'll then need to apportion it based on time. How to maximize the claim. So it's definitely going to be the actual cost method for the most part if you're able to get the documentation. So similar to the logbook, if you get the documentation in place, you can claim a significantly higher home office expense. So accounting system is definitely a very high top tax tip. Being organized when it comes time to working out your income and expenses. So what is an accounting system? Effectively, it's a way of tracking your income and expenses. So do you need it? Yes. Do you need something fancy? No. It could be as simple as writing down on paper or a spreadsheet or a complex system. It doesn't matter as long as you have a system in place of tracking your income and expenses. So we at minimum recommend a spreadsheet. So just if you summarize, write down your sale, how much, date, etc., and then the accountant can just put it in the tax return. There are some software providers we would recommend, so MyUp, Xero, QuickBooks, and Reckon. A lot of clients, believe it or not, don't need this software, and it's depending on your situation, maybe it's easier for you when you're invoicing customers and to track. It's another reason to use that other than for tax time, but a lot of the time, if it's small operations, a spreadsheet is good enough. You don't need a complex accounting system. So if you are going to go down that route and use the accounting software as your accounting system, highly recommend training. So whether you reach out to us, we help you set it up and do the training, or a lot of them, especially Xero, QuickBooks, they have a lot of videos on how to use it. So definitely highly recommend that because it's expensive to go back and fix that later on. A couple of key takeaway points. The logbook is the highest claim usually, but you can compare the two and use whichever has the highest claim between the logbook and the cents per kilometre method. If the logbook for some reason is lower, you can use the cents per kilometre method. The only issue is you actually need a logbook, so you can't go back in time and do one. And so if you don't have one, you won't be able to do it, be able to claim under that method. GST registration is tested monthly, and you should register if your business is a GST. If you should register for GST if your customers are also businesses that are registered for GST. You'll be in the same situation. It doesn't change anything. However, it allows you to claim all your GST back on your expenses. From an accounting system point of view, at minimum a spreadsheet or summary. If you have receipts and a bank statement, it's going to be very expensive to put that together. And sometimes don't use the instant asset write-off or delay making purchases of new equipment, especially if you've had a bad year. The tax deduction will be worth more in a year where you have higher income. So if anyone has any questions, feel free to pop them in the comments box. I'll just give you guys a couple of minutes. Don't be shy if you got a question. No, there's no silly questions. I like a challenge. All right. If no questions, that's fine. You can always reach out to us at a later stage, and yeah, we can schedule a one-on-one time. Whether you need help with your tax return, or advice, or even amending your tax return. Okay, we have a question. There's no specific format, so a lot of clients ask for it to be on. Does it need to go to the post office and buy a logbook? That you don't need that. It can be a spreadsheet or just a piece of paper. However, it does need to have key pieces of information on that record. So, the date you traveled, the odometer reading, opening, closing, the reason for the trip, and that's all you need. It's not complicated. You don't need to buy a fancy piece of paper. You can just use an Excel. There are apps as well that you can use to track. However, just simply on a piece of paper is good enough. Great question. If there's any other questions, feel free to do that. Otherwise, you can reach out to us later, whether you want tax advice on just a specific thing, or whether you're concerned about your current tax return, whether it was done correctly. You can go back and amend and increase your claim, if you're entitled to. So that's something we can help you with. So yeah, if there's no other questions, then we'll wrap up the stream for today. But every Friday we hope to have some live streams with advice and some sort of key points that we find along the way. Feel free to like our page so that you get a future notification about any streams, or follow us on our website. And yeah, have a good Friday, and hope to see you next Friday. Take care for now.